Hello there everyone, today's video all about capital gains tax. So, if you didn't know already, unfortunately the annual exempt amount for capital gains tax, which currently is $12,300, it's very similar to the annual exempt amount for income tax, that is going to be slashed in half from April 2023, so only in about 3 months' time. Currently, $12,300, it's going to go to £6,000 from April this year, and then it's going to be halved again from April 2024, down to £3,000. So that means that any gain you make more than £6,000 in the next tax year and then £3,000 in the tax year after that, it's going to be subject to capital gains tax. So what can we do about it? Well, think about accelerating the sale of assets. So if you were thinking about selling something anyway that would give rise to a capital gain, try and get it sold before the change comes in. So before the 5th of April, get the asset sold to take advantage of the full 12,300. Now, let's say it's stocks and shares, and you might say, well, actually, I don't really want to sell it because I want to, hopefully going to get some good capital appreciation on these shares. We've got a red hot stock tip here. We think this is going to do wonders. Okay, fine. But what you could do, you could sell it and then buy it back. So you've crystallized any gain that's within the annual allowance of 12,300 before it's reduced, and then you buy it straight back. But slight snag, 30-day rule. There is a rule in the capital gains tax world called bed and breakfasting to stop you doing exactly that. And basically it says, yes, you can sell something, but you can't buy it straight back. You've got to wait 30 days. So you've got to wait 30 days. So you might say, oh, well, in that month's time, the stock I could have lost out and I'm going to have to buy it back in at a higher amount. Not necessarily. Here's what you can do. First of all, spouse. There's nothing in the rules to stop your spouse from buying it immediately at the point at which you've sold it. So let's say you sell it tomorrow, crystallize that first 12,500 or 12,300 tax-free amount. Let's say you made a gain of 10,000, no capital gains tax to pay. Your spouse buys it back immediately in their name. And then, after 30 days, they gift the shares back to you. So you haven't lost out on any hike in price in that 30-day. Alternate strategy is what we call bed and ISAing. So, in other words, you sell those stocks and shares, crystallizing the gain, but it's below the 12,300 threshold, and then you buy the shares back straight away, but in a different wrapper, in your ISA wrapper. So not you as an individual, but in your ISA wrapper. And there's no such 30-day rule preventing that. So just a couple of ideas there. Using your other half and using your ISA to immediately buy back the same shares as you've just sold, to wash out a capital gain which is not taxable. So just something to think about there. Some planning ideas around the change in the rates, because like I said in that example, the guy had £10,000 of gain, but it was below the 12,300, so no CGT. But if he'd have done this in May 2023, well, he's got £4,000 taxable gain, where before he wouldn't have had any taxable gain. So just an overview there on a couple of strategies for buying back assets, accelerating the point of disposing to make full use of the existing full 12,300 annual exemption. If you like this video, please do subscribe. And as always, I'll see you soon.